Anthony Selwyn, hello.
Good afternoon.
You are the co-head of Savills Prime Global Retail Team. Savills has released a Global Luxury Retail 2023, which is some kind of an outlook on a very special retail market. It's a global report, meaning it's throughout the world, but we will focus on Europe. Europe has been witnessing a surge in new store openings, luxury store openings. Europe is ranking in second in terms of global share of new openings behind China, which is always the first one. What were the drivers in 2022 for this phenomenon?
I think there's lots of reasons behind that. The first and perhaps the most obvious has to relate to COVID and the effect that had on the markets with lockdown, the inactivity. So to a certain extent, there was a big rebound where, that period of time, a lot of brands had the opportunity to think about their business in a very different way. There was a big focus on online and what the stores actually provided for the business. So I think a lot of brands, whether it be small or the large groups, very, very much thought about their strategy going forwards. So I think that's the first part. The surge with Europe, particularly, if you look at the big groups, a lot of their premier homes are in Paris. If you look at the 3 or 4 main groups, so creating the right new flagship stores, making sure they're in the right locations was a big driver for those particular brands. And I think there were opportunities for several brands where the markets were a little bit poorer in 21-22 for some of the smaller groups to actually get to what we term as sort of the luxury top table in the prime locations that perhaps slightly better value at a new entry level compared with 2018, 2019.
Okay. In Europe, the most active luxury brands in terms of locations and openings were smaller groups and independents. Do you see this trend carrying on in 2023?
I think, again, there's several reasons behind, why someone opens stores. It could be, the larger groups where brand within that group have become more important and where there's a lot more investment. The smaller brands who perhaps are looking maybe for some kind of stock market placing, need to expand globally, and Europe is a key part of that criteria. It becomes, you look at some of the smaller brands, in the hierarchy, brands like, Moncler, who have taken the opportunity over the last couple of years to really expand their footprint, not only for Moncler, but with Stone Island as well. Brunello Cucinelli is a brand who have expanded more than most internationally, and that's not just Europe, but Europe, again, is a key part of that expansion program. So it can work in lots of different ways across the board.
Okay. Let's talk a bit about the economy. How is the financial crisis affecting the luxury brands in Europe? And does it have an impact on their real estate? I mean, right now and in the few months to come. What is your outlook?
The financial crisis is made up of different elements. You look at on one scale, it's cost of living crisis, which perhaps affects a high street market more than it would a luxury location. You look at the banking crisis, so to speak, which has got to have some kind of impact. It's going to have impact on the brands in a way in terms of the value of the cash reserves they may have at any one time, that they might be looking to invest in property acquisitions. We've seen certainly in the likes of London and Paris, where brands have bought their own buildings that they occupy, which is much more of an investment criteria. And the banking crisis hasn't affected that. So again, I think the financial crisis, in terms of its effect on luxury, there has to be some impact, but it's not to the same degree as high street retailing.
Okay. I'd like to rebound on the banking abilities and getting a mortgage from a bank. Would it be easier for a luxury brand than from any global market brand?
Sorry, in term, what do you mean by that?
Getting to buy a special location for a luxury brand. Would it be easier to get a credit or even to have finances for renting it than a global other brand?
I think in terms of within the business that we operate, where we see the luxury brands looking at some kind of financing for either expansion in their business, we normally see that through routes of venture capitalists coming in to invest in a particular brand and then taking them on a wider journey. You see recently with Bridgepoint, with someone like Monica Vinader, and we've seen it with other groups more recently as well. In terms of ability to get finance versus, say, a property investor, I suppose it all depends on what level of finance that a brand is perhaps taking. In London, where we've seen brands invest in their own property buildings, most of the transactions are through cash reserves rather than actually raising finance.
Okay. Well, Anthony Selwyn, thank you for that testimony, and thank you for being with us on BITV.
That's a pleasure. Thank you very much.